If I was new to the stock market, I had $10,000 to invest, here's what I'd do. Wait, but who am I? My name is Kenneth, and I'm a self-taught investor. I've been investing for over 20 years and trading stocks for myself, by myself, in my pajamas for the last 14 years. And I get it. Some people want to listen to someone who's self-taught. Hey, if you can do it, I can too. And other people say, who are you? Why would I listen to you? I'm going to go hire a financial advisor. So let me know in the comments below whether you want to follow me or you don't want to follow me. Everything is fine. My feelings won't be hurt. Now here's what I would do. I would have two brokerage accounts. One would be a Roth IRA, which is money I can't really access until I'm 59 and a half. It's for the future. It's for retirement. And the next account that I would have would be an individual brokerage account. I would take my $10,000 and I would put $5,000 of it in an S&P 500 index fund. That would be my solid foundation. And this would go into my individual brokerage account. And yes, you will pay taxes on any dividends you receive, but it's likely going to be pretty minimal. Anyway, I want to save my Roth IRA for the big, heavy hitters. Any S&P 500 index fund is fine. I own SPLG, VOO, SPY, FXAIX. They're all fine, so don't stress too much about picking the right one. What you really want to do is find the one that has the lowest expense ratio, or fees. With my Roth IRA, I'm going to start with something like QQQM. QQQ and QQQM are identical investments, except this one is a little bit more affordable per share and has a lower expense ratio. And you can see that their largest holding is technology at 51%. I'm going to put about $3,000 in this one, and it's going to go in the Roth IRA because they can have disproportionately higher returns, which means more money owed for taxes. I'm also going to put a dividend ETF in my Roth IRA. Now, they might not have as much growth, but they do have a slightly higher dividend than something like SPLG or an S&P 500 index fund in general. It's a personal preference. Talk to your accountant. You might prefer to put the S&P 500 in your Roth IRA and the dividend fund in your regular brokerage account. It's totally up to you. Now, I would look at something like SCHD, which you can see pays 3.41%. I'm going to put some other dividend ETFs right here so you can take a look at some other alternatives. And 20% of my portfolio, or $2,000, would go into SCHD. So to break it down, $5,000 into the S&P 500, $3,000 into the tech, $2,000 into the dividends. That means that this portfolio is around 80% growth centric, with 20% being in more passive income, dividends, recession proof. It'll help insulate your portfolio. Don't forget, smash the follow if you're so inclined. Thanks for watching. See you later.